Quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
Hey, can hear you loud and clear, Coach Jay. How are we doing today? At the buzzers and Coach Jay. Pretty big day.
Welcome. Yeah, pretty big day. Uh, I just ran to the refrigerator real quick, told Coach Paul I was going to grab a
Yeah,
bottle
he
of
did.
water, and we had a 20-second
You're
countdown, so I'm
less than
catching my breath
15.
right now.
You're quick.
And the markets look like they needed to catch their breath too, kind of running to the downside today. Huge move to the downside across the board. Hopefully, everybody survived the day, was able to thrive today, take advantage of the volatility that we talked about yesterday coming into a new administration. But welcome to At the Buzz, our market recap. If this is your first time here, I'm Coach Jay. That is Coach Paul. The goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. This is your first time here in our first time meeting. I'm Coach Jay, been a top step performance coach since June of 2023. Been trading for the past 12 years and in the futures markets for the past 5. And that is Coach Paul. Coach Paul, go ahead and introduce yourself.
I'm Coach Paul. I've been with Topstep for a little over a year and a half as a performance coach. I have 4 decades of experience in the futures industry. I'm here to share some of my experiences and hopefully help you become a successful trader.
Awesome. Thank you for that, Coach Paul. Welcome to everyone here. Looks like we got about 700 people watching. Thank you all for joining us. Let's get into the news for the day. We had a couple of numbers come out. We had a US trade balance number and a Canadian trade balance number as well. Come in a little bit lower than expected, 78.2 billion. Forecast was 78.3 billion. And we also had the JOLTS job openings come in better than expected at 8.098 million, and the forecasted number was 7.74 million. There was a comment in the Topstep TV chat, hey, the job market looks healthy. Shouldn't that be good for the markets? But I know the Fed has to look at the decisions they make with strong labor markets and maybe stronger than expected labor markets, which might be some of the reason we saw a little bit of a sell off. If you know me and Coach Paul, I am not going to look too much at fundamentals to guide my trades. I think what we had today was a pretty technical sell off, and we'll talk about that when we get there. But anything you're seeing in the news, Coach?
That JOLTS number, sorry, I got to take the easy pun and jolted the market
It's a layup. It was a
because
layup.
it wasn't just equities, bonds, all the interest rates broke pretty hard. Um, the currencies. So whether it was sparked by the news or whether there was a bigger thing, I don't know. On the news front, and you said it, and I'll say it: the read the market, not the news. You can know when the news comes event, and you can react. That's why we're technicians. I'll give this story again. I went to school as an economist. I knew the fundamentals of all the grains, and it harmed me for a few years because I thought I just would know all the fundamentals, and the news would. And once the news came out, it would go the way that I saw it. I found out the market just doesn't care about my opinion. It moves the way it's going to move. So that what found it interesting. Um, I think that it really started last night. Um, but what is quite a violent move. Hope everybody took advantage. We had classic breakouts on VWAP, and we'll go through that in a minute here. I hand it off to you, Coach.
Go over the top percentage movers on the day. But while we do that, let us know how you did in the chat. Were you up on the day, down on the day, break even? Was there anything that you learned from the trading day? And I will go through that quote board. So we have 35 different markets we can trade with Top Step accounts, not just the equity markets. and we're going to talk about our biggest percentage movers. To the downside, we had the Ultra bonds down 1.35%, the Nasdaq down 1.66%, and Nat Gas, the front runner for biggest percentage movers every day. This is now every day except for the first of the year, where Nat Gas is our number one percentage mover, either to the upside or the downside, down 6.18%. To
A
the upside,
relatively mild day there.
yeah, right, yeah. It's like, come on, get with it. We seen 25% days in nat gas recently within the last month. To the upside, we have crude oil up 0.92%, soybean oil up 2.38%, and platinum, our biggest percentage mover to the upside, up 3.56%. And that has been one over the last couple of days. I'm just going to pull this platinum chart real quick. Um, if you're looking for a trend in metals, platinum has been the one at least for the past since the year started, right? Since the beginning of the year, platinum has been the trend. We are kind of coming up to this higher time frame supply area, resistance, whatever you want to call it. We can see the last time the market was up here and had to make a decision. Buyers did not step in and rejected it. But this looks a little different, right? This market looks pretty strong. Going to pull up Coach Paul's moving averages real quick. We're above the 200 moving average. The difference I see here on this platinum chart, we'll just do a quick analysis of this one, Coach. Uh, we're above the 200 moving average, above the 20 and the 50, but the slope of these moving averages is a lot more dramatic than the last time we were in this range.
It's yeah, shows urgency.
Yep.
It's
Yeah.
as we talked earlier. I wonder if they're unwinding some spreads. When we
It looks
go
like it.
to gold later, we'll see. And the silver.
Absolutely. To round out our big four, we already talked about crude oil up 0.94. We have gold up 0.66%. The S&Ps down 1.05%. And of course, we already mentioned the NASDAQ down 1.65%. At one point today, the NASDAQ was down over 2%. I think it was 2.15% at the low of the day. Um, Interesting times. I'm gonna pull up a Nasdaq chart. I've been trading the S&Ps, but I'm gonna pull up the Nasdaq since it was the bigger percentage mover today. And we can start with last night, Coach. We have this 200 moving average on the 30-minute, which we did trade back below again. We talked about this yesterday. Being above it, the market's maybe catching a bid and going to continue a rally. And today, pretty much rejected that. Here's last night's open at the high of the day. Wow.
Yeah,
My first time looking at a Nasdaq chart today, really, because since I've been focusing on trading the ES. But I mean, last night presented a pretty good
third
trade to the short side. We had volume leaving the range, price leaving the range fairly early. It wasn't the most convincing move, right? We've seen some sharper declines in the overnight trade, but a decent opportunity here. We can see that 50% of this opening range, and this is the 30-minute opening range, 50% of it holding. We've talked about our stops. If you're taking this trade, being two ATRs, which would be well out of the way for that trade. Um, and I think you get a 1-to-1 here to these lows. Uh,
oh yeah, you did.
Even if you didn't, and you didn't take it here, that's stop placement. And we talked yesterday about stop placement. Coach Andrew just said to us in our chat that today was a day where you needed 2.1 ATR stop for your trades. That's exactly what was required today, right? I think this is a perfect example. Yesterday, I had a question about, when do I use two ATRs for a stop and when do I use something else, like some market structure? For this trade, I didn't take it, but if I was going to take it, this one needs a two ATR stop, right? The last thing I would want to happen is, especially framing this kind of as a higher time frame trade, the last thing I would want to happen is take this short, be completely right about the direction of the market, get stopped out on this move because my stop is too tight, because I want to conserve money, and eventually have the market, run 2% in the direction that I wanted it to. Now, that might mean I have to trade smaller to allow my account to facilitate that trade, but it's what was needed on a day like today. Um, and again, that stop was so far out of the way, the market didn't even if it looked like it was going to go test it, you had the opportunity to take the trade off before it got there. So, shout out to you, coach, on that 2 ATR stop. If anyone traded with it today, go ahead, coach.
Oh no, you're welcome. Just want to also bring up the fact that some people they frown upon it. It's like I can't trade smaller.
Yeah,
Um, if you're staying in tune with the market and staying in tune with volatility, y- 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 you're the volatility right now in the S&P average true range in the daily. Today it ended at 102 points. About a month ago, it was 40. So it's 2.5 times the volatility. Now, if you don't adjust, you're taking 250% more risk than you were just 3 weeks ago. You can get lucky and catch it, but I don't know how to pick a trade that's going to be a winner or a loser before I get in. Have you discovered a way?
I did when I thought I had everything figured out, and then you put on too much size because this is the one that it's going to work, right? Yeah, there's no problem here. I can over leverage, and that's when the account is gone. So no, there's nothing, no such thing as 100% trade. As confident as we can be in some of our setups, and we need to be, you never know, right? Even if it's a 99.9% trade, there's that 0.01% or 0.1% that is going to can blow your account if you allow it.
Yeah. Yeah, that's why you need to adjust. You know what? Market makers adjust too. They're measuring volatility. If they're a 100 lot trader and now they become a 50 lot. I'm in the pit when it got crazy. Locals, good locals would say instead of being if they were 100 lot, up, I'm bidding 100, offering 100. They will bring it down. I'm 50. I'm 50 only. You're not here to be a hero. You have to adjust. Um, and sure, you can. And by the way, you can get lucky in a volatile time with just being in a winning streak. But sooner or later, that catches up to you. So just understand the role volatility brings in your risk management.
We got some questions here about moving averages in the chat. Uh, why don't we get to those right now? I'm going to read a
Sure.
couple of them and then we'll kind of just go over how you look at the moving averages, coach. When using the 21 EMA, and just for clarity, JD, on this question for you, Coach Paul uses a 20 simple moving average. Do I use it as an automatic place to do business or use it to define support and resist? If I miss the anchored VWAP trade, can I back it with the 21 EMA on the 5 minute? There's another question here. We're always looking at the EMA 21 or 200, but at what time frame do those indicators actually work in futures trading? And then one more question on these, which is the 20 and the 50? If I pull up my charts here, the yellow one is the 20, the purple one is the 50. And do you care about them crossing as an indicator? Uh, I think I'll look at the cross just as a potential turn in the direction of the market, but I do not take it as a trade signal. Now, coach, for the other ones, can you use the moving average as an automatic place to do business? And then what time frame are you looking at these trades to work, quote unquote, for your futures trading?
Okay. Very good questions. I use them as support resistance in a trend. If the 20 is crossing the 50 and it's overextended and VWAP is under it, I'm not going to be aggressive on buying it if it's above the 200. So I would say that is important. Also, the cross of the 20 over the 200. We've seen this many times. And I don't have the stats, but we've been watching it. And coach, you've noticed this on those like today. If we bring up the half hour S&P or Nasdaq,
Yep, got it
pick
up
your
here.
poison. Once VWAP got under the 20, we got a trend. And we've been noticing that yesterday. We stayed over the 20 and the VWAP. So I would do this. That's we've been noticing that it's a shorter term trend. So once you get a trade on, I would use that as a trend indicator. Like, don't be selling it if it turns around and gets back. Like today, if it got back over the 20, don't take the trade if you're looking to sell it. So very good questions, and this is why we have this platform. Um, Next thing is you could start observing that and share your observations as we go forward. But major ones on the daily, especially, I will look for a cross because if we go to the daily and the S&P,
S&P, here we go.
we're about to have a cross.
Talked about this yesterday. It's getting
So
interesting.
is that guaranteed? No, but the flows are changing. The trend has been very challenged now. Can it turn around and rally above it? Yeah, sure. But the trend is still up or above the 200, but it's challenged. Another why are we going to bring this up? I might as well bring it up now. What did you frame out there, coach?
This is the FOMC candle. Last FOMC meeting that we have the minutes out tomorrow. We've been talking about this. Does the market trade through this imbalance back up to the upside? It looks like 50% of that imbalance is starting to hold as a resistance. We have the 20 and the 50 moving averages kind of crossing over each other in the S&Ps. And the low of the candle, 5900, 5906 is still kind of holding for now. But we'll see. We will see.
Yeah,
60-40 also. I, you know, I forgot who it was in the chat. It was just I was just talking to about it. Um, but that 60-40 level, remember that level we were talking about this a little while ago. But we had 2,500 contracts trade at 60-40. This was about 2 or 3 weeks ago now. Um, the resistance at the high of the day today also lines up with 6,000 in the SPX. It's a lot going on here, and the market has some decisions it has to make um,
yeah,
soon.
coach. That was Yard and Lapid pointed that out.
There we go. Yes, there we go. Thank you, Coach. So Yarden, yeah, shout out to you. Took the short around this zone that we talked about. Some high volume happened there, and it's not always going to work, right? Quote unquote, right? It depends, but it's a level, right? It's a zone to see how the market kind of responds around there, and when it does on a day like today, where we had that rejection right at the highs, and then we'll go down to a shorter time frame chart here, but that 60-40 right at that high, we had the session open, and I mean, I didn't catch this trade, and someone had asked, "What trade did I catch?" I made money on this account today to the long side. Um, I'm honestly not even happy to say that, but
I'm going
I
to give
will.
you a golf clap.
Thank you, coach.
I, I want to interrupt you for 1 second. On a day like today, if you can make money on the buy side, you
Yeah,
have talent. If I'll go today, if you made I'll just you had you, I'll put this out. Who's a better trader? Someone that tried to buy it and scratched or lost $100, or someone who was trying to sell it and made $150?
right.
I'm not going to give you the answer, but that's something to think about.
On
So
a day
good on
like,
you.
thank you. On a day like today, I wish I would have just turned my brain off and just sold it when we saw it, because this is one of the ones, coach, that we've talked about where when that urgency happens this early, it's one of the ones. And actually, I framed this out incorrectly. Let's do this the right way. Let's actually look at what that opening range was like. When it happens this early, and we don't get these all the time, uh, these are the trades that usually end up being the trend for the entire day, right? from the open, the market never got back above VWAP. Um, or never closed above. It traded above a couple of times, rejected right at the low of the opening range. I missed this trade. I wasn't at my desk. Um, and then I think that kind of it throws off your process a little bit. Anytime I don't, we are creatures of habit and we do the same thing all the time. And I'm not making any excuses, but I think when I see that when I get to the market and we're here, it's kind of hard to sell it, knowing that my original sell should have been here, and that's how I ended up buying. But I had to be extremely patient, right? It it was because I was just like, you know what, I could blow up an account trying to trade this after the fact. But this here, anyone in the chat catch this trade here? Um, just let us know in the chat if you caught it. So it's one that we talk about all the time. Um, we literally talk about this every day, and in the equities today, it was clean. And exactly what you want to look for. Coach, I know you took part of it as well. It's a great trade.
Yeah. If what I like doing in this trade is I'll put on a micro
Yep.
and just, on a micro, you can pick $400, $500 on a day like today on a micro.
Yeah.
And we talked about this earlier. And before we started, it's just easier to hold something if you're not worried about it ripping your eyes out if it goes against you, because then you're dealing with nothing but anxiety. Uh,
Percent.
there's a there's an old market saw that's been around a long time, longer than me even. Um, Size down to where you can sleep at night. Then you can make better decisions. If you ever been over leveraged, which is probably every one of us, you know exactly what I'm saying. Every tick matters.
Like you're at the horse track. Come on, come on, come on, come on.
Yeah, every tick
Gotta do
against
it.
you is personal.
Yep.
If when you're there, get out of there, because sooner or later it's going to collapse on you.
Percent. 100%. The trade I took eventually for a long, I actually what I did, I locked myself out for an hour. Uh, and then came back to the markets kind of bottoming here. There was a volume event in the Nasdaq, and then I took this long back up towards VWAP, and that was the trade for the day. But I do kind of want to point out, right? I was well aware that I was going to have a bad day if I traded this. And just shout out to the risk management tools that we have on TopstepX. Don't have it on many other platforms where you do, where it's not maybe as easily accessible. Uh, Literally click two buttons and I'm locked out for an hour. Gives me a complete reset, right? I'm not thinking about the money that I should have made here. I'm not even thinking about the markets. I went and made breakfast, came back, clear mind, and then was able to see a trade setup that presented itself. Anytime, and I think this happens with a lot of traders where we miss an opportunity and then try to force that opportunity back into our accounts. And I don't know about you guys, but anytime I try to force the market to do anything, it shows me why I can't. Uh, so, knowing that, knowing yourself as a trader, knowing when it's time to step away, I think is extremely important. Um, and coming back with a clear mind and seeing a trade. Anything
Great
else
points.
on the ES coach? I'll pull up a Nasdaq chart as well. We did have one up, but I mean,
But I'm good. I leave it up to you.
all right. I think we're good there on the Nasdaq and the ES. Uh, we'll see what the rest of the week brings. Tomorrow we have the FOMC minutes. It's just the minutes, no new information. Shouldn't be any new information, but we also do have uh, jobless claims like we do every Thursday, which could bring us some volatility as well in the morning. So just be aware of that. Coach Vince, my guy, what's going on? Let's go
Hey,
to a
coach.
different market. Let's look at gold here, Coach.
Man, that's above the 200. Let's see. But man, there's a lot of whipsaw back in the gold. But it was a great trade last night. Um, got it broke out. We had urgency. Um, VWAP broke out within a couple hours. Held. Um, so, Coach, let me ask you: on a breakout like this, would you put a 2 ATR stop, or would you just put a stop on the new lows?
I was that's a good question. On this breakout here, I would go stop below new lows.
Okay.
Yeah, I would say new lows. Because at that point, if we make a new low, I could go 2 ATRs here, but I probably wanna be out of the position either way. And
All
it's
right.
not far off, right? If I take this breakout here, let's say we didn't get the perfect tick, let's say we got up here, 2 ATRs would be 7 about 8 points. 8 points and a new low isn't that far off? That's a good question there, coach, because it's only a 2-point difference. I know
Yeah, I'd
myself.
almost
I
go
know
with
myself. I
the
think
two
I'd go
ATR,
new low, but what would you go with?
2 ATRs. I like to give it a little more space.
Mhm.
Um, but that's something to watch going forward. Also, 2 to 1 at night. If you get 2 to 1, you done good. I I mean, so it was 8 points. Did you get 8 points the other way, or 16?
You got, if we got in here, you got 8 there, you got 16 there, you got
There it
24,
is.
you got a
Two
3
to
to
one.
1. If you were greedy and looking for a 4 to 1, you didn't get it, but really nice trade here.
Yeah. So, and by the way, I'm just gonna go back to it. What is VWAP? It's volume weighted average price. It's better than price. It's volume. It's it's real. I mean, it's skin in the game. Not. I mean, it's money put up into the pot. So how does VWAP change? It has to be volume. Money goes. It has to be volume. So if volume is working and there's underlying buying, don't fade it. I'm just gonna leave it there. It's it's one of the greatest indicators or tools that I've seen in my 40 years.
Stuff. Anytime you ask that question, what is VWAP? I just want to answer it's the market. It's the market telling us everything. It's the market telling us what prices matter, how much they matter, and where it's trying to go. Uh, I think, and I forgot who asked this question on their traders podcast, but if you had to pick one time frame and one indicator, what would it be? For me, it would be a 15-minute chart and VWAP. And I don't even use the 15-minute chart often. You guys don't even see me trade it. But the reason I would go to 15, if I had to pick one chart, is because it's in the middle of the 3 and the 30. 15-minute chart, VWAP, that would be it. What about you, coach?
Time frame?
If you had to pick one time frame, one indicator
Oh, um,
to day
for
trade.
day trading,
Yeah, to day trade.
three and three and VWAP.
3 and VWAP. There we go. There we go. Uh,
And shout out to you. You're the 3 minute
yeah.
guy. You could do. I think you could do it off the one. I like the three a little better, a little more time, but definitely VWAP.
So
I'll tell you what. I came from the pit, and in the pit, we if you were close to volume, like a top step trader was close to volume. That's what it was. You had to take size trades, but that was the edge. You could buy the bid and sell the offer, and your chances of scratching were good. Plus many other great opportunities, but you're close to volume. But when people ask what the volume was, who's trading, who bought it, who sold it, it was a big thing. It was all a guess. I mean, we would have to just turn around and, they want to know who bought it. And you'd never be wrong if you said, oh, it was Goldman or it was Morgan. Uh, It was it was shady. With VWAP, it doesn't matter who bought it.
Someone did.
Someone bought it, and it's there. It's calculated. It's real. It's not made up. So that's why, to me, that's become my number one tool. Just it's 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 literally organic to the market. So I guess I'll
It's
get off my pulpit now and
I
move
mean,
on.
I asked the question. I kind of knew I had a feeling where you were gonna go, but it's good to think about, right? Even in your own trading, traders, for all of you watching here, if you had to pick a time frame and an indicator, if you use any at all, what would it be? And then if you have 20 other things on your charts, that might be an opportunity to cut back on some of the things that may not be directly influencing your trading decisions, but could be causing some mixed signals. Uh, Oakla Torch
Wow, that
says
coach, that's a great point. You can get paralysis from over analysis. An old saying. Yeah, pare down. Oh, yeah, it's a great point. I had to bring second that. Great point, coach.
mentioned before why the 3 minute time frame. Can you tell us why? 3 minute time frame for me just kind of helps me uh, stay patient, where I'm not looking at a 1 minute chart or a tick chart or anything like that. I've made uh, the comparison to boxing. Well, I'm a boxing fan, and boxing rounds are 3 minutes around. Uh, I'm reading the volume in 3 minute clips to kind of see how the market is. Uh, Responding, right? Who is in control, who's winning a round, if you will, with the boxing analogy, right? Is it buyers or sellers? And a 3 minute time frame kind of helps me, especially when things are moving pretty quick, helps me understand the market from there. Um, we got a crude oil chart up here. Crude oil on the 30 minute was pretty quiet overnight. And then we started to see volume pick up at the end of the London session, or not really the end of the London session, 2 hours into the London session. Crude, the ATR is kind of decreasing again. It's trying to break out of this range. I think it needs to get above 75 for me to really start getting interested in crude. It is starting to trend, right? Since we broke out of that higher time frame consolidation that we were in. We have broken out of it, so I do want to give crude some credit. And for any crude traders that are trading this, the markets are picking up a little bit. But today, I think we had a 75 tick range for the New York session, which is hard to trade. So if you didn't catch this trade overnight, um, by the time it got to the point where we were trading in the New York session, it was difficult unless you're a range bound trader. Now,
Uh,
go ahead,
Coach,
coach.
you have the half hour up there?
Let me pull it up. Yep, right here.
Can you blow it up a little, make it large, just where we can just see today's action? All right. Someone asked earlier about the 20. This is a
Okay.
classic example. Um, when we got over it, was that earlier this morning? And then VWAP got over it. So short term, we can just say that there is buying, right? Now, look at the 20. It acts as support all one. Once we get over one, two, three, 4, 5, 6, and as we spoke, I think we just had about a 40-cent rally off of the 20, and so that and we've seen this a lot. So I'm looking at a 20 when we have a rally in a day acting as support or resistance. We flip this over. It's something to watch. Um, I'll be watching it, and if you're watching it, share it with us, please.
Pretty range bound throughout that New York session. And Fresh Fade in the chat just says, I'm a range trader, love ranges because the range rotation is a little predictable, which is exactly what range traders want, right? We've talked about it. Uh, First step to me, I think, in range trading is identifying where the extremes of the range are. And then the second step is going with a wide enough stop that if that range breaks, then you're wrong, right? I think the last thing I want to do anytime I think about range trading is set a stop that's too tight within the general area that the market can trade to. Because for me, I understand that if I'm taking a range bound trade, I need to broaden the time horizon for that trade. Right? It might not. I'm a momentum trader. You know, used to trading the Nasdaq and sometimes getting an 80-point move in 3 minutes in the Nasdaq. Uh, as a range trade, that 80 points might take 2 hours, right? So the last thing I want to do if I accept that I'm going to take a range trade is get ticked out before the market eventually moves in my direction. So wide stops, trade small, and there's opportunity for that as well. Coach, I don't want to lose you, Coach. You all right?
No, I'm good. Yeah,
All
I
right.
think it was contagious. I coughed, you started coughing.
Yeah. Um, all right. Nat gas, since nat gas has been one of the top percentage movers, let's take a look at it. Get some water. Yeah. Here,
Actually, I was choking on some carbonated water.
Uh, Here is nat gas. The top percentage mover again. It does it again. We have this Sunday gap. We talked about this a little bit as well, right? When, if at all, does nat gas fill the Sunday gap? We started on it today. We started on it today, and we're about halfway through it. Do we get the potential test of it, of the lows of that gap tomorrow, down at 3.36? Uh, but again, top percentage mover. Took a little while to get going. Um, right around midnight Eastern time, we started to break out of this range to the downside with some volume. We had a little head fake above, and if we're taking this VWAP breaking the range trade, just remember, right? We haven't talked about that preempting this move a little in a little while, but this is a false breakout, right? Where if we're going with the checklist for that trade, this is a B minus at best because the volume is still in the middle of that range, and then we see what happens, right? So if you're going to preempt the trades because you want better trade location, just understand that you might be accepting more risk because of that confirmation or the lack of confirmation of volume. And then to the downside, we see it where we might have sacrificed trade location because we really didn't get volume leaving the range until this candle's printing. But we talked about it yesterday. You don't need to catch the high and the low of the move in order to get in it, right? I would have loved to be short net gas here for part of this move, and you missed the start of it. But tops and bottoms aren't meant for retail traders, right? They're meant for market makers who create the tops and bottoms of markets. Not meant for us. So if I can catch a piece of this move, this is a great trade. Anyone trade nat gas today? You traded at all, Coach?
No, I was looking to buy it,
Okay.
and it's funny you brought that up. Um, that false breakout. Um, I was patient,
Okay.
and it paid off. And
This
even if okay, let's say we go through there and you bought it, you preempt the preempt VWAP. Well, if you do that, wouldn't it have to stay above VWAP to be good?
percent.
So it's it. If you're aggressive, I mean, here, this is the one about cutting your losses. I mean, right there. Okay, I'm wrong. Done. It closed below it. Um, right there. All right, but I don't. I'm no longer going to preempt. I say that I, this time for sure, right?
I
I'll
think
just go back.
that
I don't like preempting it.
That goes back to your comment on rules can be broken, but principles can't, right? The rule might say don't preempt it, but we're traders at the end of the day, and we're making day-to-day decisions. Is there going to be a time that I preempt a trade? Yes. Is there going to be a time that I preempt a trade and it works out exactly how I wanted to? Yeah. And then are there going to be times where you preempt a trade and it does exactly what this did? Yes. And I think that's why, coach, what you mentioned is so important. Where am I wrong? It's okay. It's okay to get in a trade. It's okay to get in a little early. But if you can't accept when you're wrong on this, and you just gave a couple of opportunities, right? Market closed below VWAP, that might be an out. The market closes below this opening range, that could be an out. And then the last one would be the two ATRs, where that should be that, hey, this trade is wrong, stop, and just get out and be okay with it. And it saves you a ton of
Well,
money.
that's what the two ATRs doesn't mean you have to wait for it to stop. That's what you're willing. That's the cost of entry at max. That's where I'm really wrong. And you give it some time like this. If you want to preempt it, you have the two ATRs. You see something like I said, it gets back under the ATR, closes, by the way, not just trade. Okay, I'm out. I get a smaller loss than the two ATRs. I want to stress this. Doesn't mean put it on and go, all right, I'll keep it on until I get stopped out. But here's another thing. When you have that stop and it's within what you can afford in your account, you're going to trade with a better mindset, period. Because it's only a matter of time before something happens and you get stopped out on two ATRs because some news flash, and you're going to be damn glad you did. But using that as it's like I call it an ejection seat. Like I'm really wrong if that happens. I rarely get stopped out on an ATR, by the way.
We measure it. It's so far out of the way that it's just like exactly like you said, something would have to go wrong if you were if you got in a trade in the flow of the market, the flow would have to completely change where that 2 ATR stop is. Now, again, depending on the contract size you trade, it's going to be so far out of the way that it's going to cost a lot if you're trading too big, but that's
Yeah,
why we trade small.
yeah,
Think about what we're saying here, right? And again, anything we say here is for educational purposes only, not trading advice. But if you can trade with a two ATR stop, you still have to do it's not just blindly put on a trade and say, yeah, I'm just going to go with a wide stop and just, hopefully the shit works out. And if it doesn't, whatever. If you get the direction right on the market, so you're doing your job to read the flow of the market, then you're doing your job to execute in the flow of that market and just saying, hey, market, take me wherever you're going. That stop is so often so far out of the way that you can just be in the flow of the market and not have to worry about micromanaging a position or anything like that, right? You still got to do the early work, right? You still have to um, identify flows. We've been giving hints on identifying flows for the last year. But then if you can put your trade on somewhere in that, close to the the market, right? Where again, we don't want to swim in front of the shark, not shorting down here because two ATRs you're going to get stopped out, but a trade close to volume with a wide stop. And I don't even I think we're doing a disservice by saying a wide stop. It's a necessary stop, right? A market generated information MGI stop, right? Market generated information stop. Where this is the volatility that we're seeing currently. This is where I need to be. Where if we get up here, the market is telling me something completely different. It's a great trade. Great trade. Shout out to Andrew, our mod, who sends you all of our questions. But he sent us a message yesterday and said, "Hey, that two ATR stop is a difference maker," and I agree with him. Um,
yeah. He said it kept him alive, and he's basically scratched the day. Uh,
just some questions here. We got about 15 minutes left, and if you haven't done so already, if you like what you're hearing here, please go ahead and hit that like button. Um, we don't fish for likes. I looked at the video yesterday, and I'm gonna be honest, it was on me. Neither one of us asked for likes yesterday, and I think the video had like 14 likes or something like that. Uh, which was just like,
oh,
damn. I was number 15 because I don't like it myself. But if you like what you're hearing here, if we've helped you in your trading journey at all, hit that like button. And let's get into it. Coach Vince
Don't
just said
make us bring don't make us bring Muhammad on to get like
exactly, exactly. And Mo's gonna get us to 1,000 likes. So I don't even know how he's gonna do that. We got 720 here watching. He's gonna bring 250 of his friends and tell them to like it as well. And that's why we love Muhammad. Um, all right. So Coach Vince asked, "Is the indicator just named ATR?" Yeah. In Top Step X, if it's just the average true range indicator here, and then it's on the bottom here. And I think the value that it gives you is the ticks for that specific market. So we can see with nat gas here, it's like 15. I just count that as 15 ticks, uh, and go from there.
yeah. And by the way, the average true range fluctuates. And it reflects the range of the last 14 bars. Use the 14 bar because you want to keep it present. Um, but it gives you the idea of and it's going to 99% of the time it's going to be a smaller range at night than it is during the day. So it's ATR is basically a volatility measurement.
Good to see you here. Thank you for joining us. Hopefully, you're having a good start to your new year. Um, let's get to another question here, Coach. I'm going to throw this one to you. What do you think of Bank of Japan? What do you think about the Bank of Japan potentially increasing their interest rates? The yen is destroyed. I'm going to pull up a yen chart. Uh,
Oh, I didn't know that.
I didn't either.
Um, I'll tell you what the market thought. Sell, Mortimer. um, they would raise rates. Hmm, that's an interesting question. From an economic, um, I put on my economist hat. They're trying to attract money. They've, I mean, let's bring up the yen on a weekly chart. This is dramatic. Turn that around, and that's a and that's Bitcoin. But
Right.
no, it is in a death spiral. So a fiat currency has to attract capital. Biggest way to do that is raise rates. The the yen carry trade was borrow money in Japan, convert your currency, lend it out, or but the key is borrow it cheap in Japan. It was in the negative interest rates. I still find it very hard to even say that. Like, really? What negative
What does that
interest
mean?
means? Think about it. What does that mean? It means the currency is worthless. Money is worthless. You're better off spending it. But it's interesting. It tells me they're probably looking to do another round of intervention. First, first with talk, and then we'll throw subtle hints, and then we'll spend 1 trillion yen trying to change the direction. But the direction needs to be changed inherently or organically. You have to have a reason. Higher interest rates would be a good reason. Um, but I don't see. I'd be surprised to see that happen. But hey, anything can happen. The trend is still down. Um, and it's nothing against Japan. I love Japan. I thought about
The
moving there
chart is
years
the
ago.
chart.
The chart is the chart. Um, that is boy. And I haven't looked at that chart in a while.
We
You want to own that?
we are below the 2024
Yeah.
low, which is the last time we had a increase in rates, right around these same prices, and we see how that affected the yen. So if that is the news that comes out, maybe patterns are patterns, but I think that we need the catalyst first to change any type of direction in this market.
Yeah, they yeah, that was July 11th. And they spent a lot of money doing it. And what was the result? They got about 6 months or 3 months worth of value, only to be rejected. So I don't. By the way, I still trade yen. It's a great trade. We go to the 30 minute. That was a Trump comment, that rally yesterday,
Yes.
and right back under the 200, where it's a much slower trade. If you're there for drama, don't trade it. Um, but the trend is definitely, I have a flair for the obvious. The trend is down.
Yes.
Yeah, so I, going back to the question, that would shock me. That would change, and depending what, if they raised it an eighth of a percentage, um, they have a lot of work to do for having zero interest rates for, I don't know, for years, or negative interest rates. It's like I said, I can hardly say the word, but hey, until they do, I'll get short and I'll use a 2 ATR stop.
Here we go. All right. Any other markets you want to talk about, Coach? We have a couple of questions in the chat that I do want to get to.
Okay,
But
let's go to the questions.
all right. So from Shubham, how would you see a strong move through VWAP from up or down in the 3 minute time frame? And then Trevor Gale, uh, similar question. So we'll put these both together. When VWAP leaves the range, does it need more volume increasingly to go in that direction? When do we know that it's getting weaker? Great question. I would say watch yesterday's at the buzzer because we talked exactly about this, right? When do we see that turn? But we'll go over it right now, right? So depending on the time frame that you're looking at, right? If I'm looking for volume patterns, I'm usually looking at them on a shorter time frame chart, right? So on a 3 minute. The one thing I want to see if I'm reading volume, right? So in this case here, we have to simply answer your question, yes, you need more volume for the market to continue lower, and you need it to be selling volume. Uh, so we have VWAP leave the range. The one thing I want to see is sustainable volume with these volume patterns, right? So what that means is I don't want to see a spike in volume that has no follow through. And normally, when we're taking these trades early on in the session, the likelihood, just think about how trading works, right? The markets open up. The likelihood of volume dying off in the first hour is pretty low, right? Unless there's a big news event coming out later in the day or something like that, the likelihood of volume just disappearing is fairly low unless we're trading in low volume times. So I want to see continuous volume, right? So that's either uh, this is what I would call a waning pattern, right? Where volume had a spike and then it's kind of slowly decreasing. This is okay because it's still trading. If we look relative to the volume that was traded on the open, it's still trading around here, right? So this is still a high volume time. What I don't want to see is this, right? So if we had, let's say we had this spike right here where we had 15,000 contracts traded in a 3 minute period, and then the next candle is one of these, like this 3,000, that's going to give me some hesitation about the potential for continuation of that move. So if you're in a trade, you want to see volume be sustainable. You don't want to see anything that is some type of volume anomaly, like something like this, where we get a spike, right? We talked about this one yesterday. Look at all the other volume candles around this one. We get a random spike, and it's like, oh, yeah, we're going to continue for a short. Eventually, the market does continue, but look when it continues, when that volume picks up again. When we go into this valley here, uh, this feels a lot more like a 50-50, right? Where volume can step in at any moment and push the market in either direction. But in the morning, again, we had that sustainable volume somewhere near the highs. It didn't just completely drop off. We got a trigger, this spike right here. sustainable volume, we get fluid price action. Unsustainable volume or choppy volume, choppy price action. Uh, Hopefully that makes sense there. And then uh, another question here: when you referred to bars regarding the input value for ATR, can you explain this? Um, so the ATR value, and coach, correct me if I'm wrong here, but ATR value, we're looking at the time frame, the ATR relative to the time frame that we're trading, right? So I'm on a 3-minute chart right now. The ATR, we can see it on the bottom left here. Hopefully I'm not blocking it. Yep, there we go. The ATR, you can see this value change. It goes from 24 and a half up to 25, right? That's one ATR based on a 3-minute chart. What Coach Paul is suggesting is taking this value, whatever it is at the time you take the trade, taking that value, multiplying it by two. So if I took my trade here, let's say I took a short here, my stop would be 40 points because that one ATR is 20, two ATRs would be 40. And that's based on a 3-minute. Now, if I change this to a 30-minute, ATR is 62 points here. So based on the time frame that of the chart I'm looking at, my stop would be 114, nope, 124 points. Did I do that math right? 124 points. Coach, you still there?
$5 in the till.
Oh, there we go.
Um, yes, that's right. And remember, the average true range looked, it's a summation of the last 14 ranges, the high and the low, and then it averages it. So it breathes. It's not the same. Your risk at night is not the same as it is during the day in the US. In the crude or gold, it might be, but that's the thing is, it's constant. It's looking back, taking the summation of the last 14, giving you an average that is present.
We are at time. We got a question from Nelson. What do you think on the 10-year note? All the treasury products are trying to find the bottom and they can't yet. Uh, that's that's my short
Uh,
analysis. What about you, coach?
Look at the end.
There we go.
The end and the 10-year are like Siamese twins. They're not really moving away from each other. The trend is still the same. Um, no, definitely down. That's all I can say. It is, I want to sell it. I'm short. I don't want to buy it. So trend is your friend, and but we can all use friends.
But yeah, we can all use friends. Speaking of friends, and speaking about alley-oops and layups, we got a friend joining us tomorrow. Anne Marie. Anne Marie is going to be joining us tomorrow for At the Buzzer. So bring your questions. We love having guests on here. Like we said, we're going to do a lot more of it. We'll be bringing guests on. I think we have Anne Marie tomorrow, Coach Vince next Monday, and Coach Robert next Thursday. So we're going to be bringing guests on here. So just in case, and we know it's not the case, but just in case you're tired of hearing me and Coach Paul, you'll get some other perspective on the markets. We'll see how some of our friends are trading and what they're looking at, giving some different perspective because we know we have traders that trade a bunch of different styles. So it's always good to hear another voice. So tomorrow we will have Anne Marie on. Um, that's all that I have. I'll be on Fast Markets tomorrow. So I will see you all then. Coach, you got anything before we go?
Look forward to having Anne Marie on tomorrow. For the rest of our At the Buzzer audience, if you're getting tired of hearing us, hit the like button anyway. And have a great evening, and we'll talk to you tomorrow.
See you all tomorrow. Have a good one. Thanks, Coach.
All right.